Namaste, and welcome. If you are a business owner, a chartered accountant, a tax professional, or a finance student, and you have ever been confused about the real difference between the UAE's VAT and India's GST, then this video is for you. Today we will break down both tax systems, side by side, in a simple and clear way. On this channel, I simplify India and UAE cross-border finance, tax, and accounting, drawn from real experience. If you are new here, stay till the end, and I will tell you exactly why you should subscribe. First, the basics. VAT, value-added tax, has applied in the UAE since 2018. It is a consumption tax charged at every stage of the supply chain, but the final burden always falls on the end consumer. It is governed by the Federal Tax Authority, or FTA. GST, Goods and Services Tax, has applied in India since 2017, replacing many older taxes like excise duty, VAT, and service tax. It is also a destination-based, multi-stage tax. And an important update, in September 2025, the GST 2.0 reforms simplified the rate structure, which we will look at shortly. So what do the two systems have in common? 1. Both are indirect, consumption-based taxes, ultimately paid by the final consumer. 2. Both are multi-stage taxes, collected at each step from manufacturing to retail. 3. Both allow input tax credit, letting a business claim the tax paid on its purchases and avoid double taxation. 4. Both require periodic return filing through an online portal. 5. Both use a threshold-based registration system, with a mandatory and a voluntary level. And 6. Both are moving toward E-Invoicing. Now, the most important part, the differences. First, the rate structure. The UAE has a single flat rate of 5%, with some zero-rated and exempt categories. India, after the GST 2.0 reform effective September 2025, uses four main slabs: 0, 5%, 18%, and 40%, plus special rates for gold and diamonds. Second, the tax authority. The UAE has one central authority, the FTA. India has a dual structure. The center collects CGST, the states collect SGST, and interstate supplies attract IGST, which makes Indian compliance far more complex. Third, registration thresholds. In the UAE, registration becomes mandatory at 375,000 dirhams of annual turnover and voluntary from 187,500 dirhams. In India, the mandatory threshold is 40 lakh rupees for goods and 20 lakh for services. Fourth, filing frequency. The UAE is mostly quarterly. India is mostly monthly, with a quarterly option for small taxpayers. Fifth, the composition scheme. India offers small businesses a simplified scheme, with a flat 1 to 6% on turnover without input credit. The UAE has no such scheme. Sixth, penalties. The UAE revised its framework in April 2026 with a fixed 10,000 dirham penalty for late registration. India charges a daily late fee and heavier penalties for wrong invoicing. And seventh, E-Invoicing timelines. The UAE's rollout is phased through 2026 and 2027, while India has had mandatory E-Invoicing since 2020. Let us make it practical. Suppose you export goods from India to the UAE. On the India side, exports are zero-rated under GST. You can export without paying tax using a letter of undertaking or pay and claim a refund. On the UAE side, when those goods are imported, 5% VAT usually applies, which a VAT-registered business can then offset against its output VAT. This is exactly where cross-border businesses need a clear understanding of both systems to avoid unnecessary tax costs. So, who should care? For business owners trading across India and the UAE, understanding both systems prevents compliance mistakes and double taxation. For the SIA fraternity and tax professionals, cross-border VAT and GST expertise is a growing, high-value advisory niche. And for students, this comparative knowledge gives you a real edge in international tax interviews. Quick recap. Both taxes are indirect, multi-stage, and credit-based. But they differ in rate structure, in authority, and in compliance complexity. If this video helped you, please like it and share it with your SIA friends and business contacts. And if you would like more practical India and UAE finance and tax content, subscribe now and hit the bell so you never miss a video. Tell me in the comments, Which one do you find more confusing, VAT or GST? See you in the next one. Take care.